Hello friends, welcome to my channel and thanks for watching this video. Friends, in this video we are going to discuss about the stock of Wells Fargo and Company. So Wells Fargo is not only a US specific company, but it's a conglomerate and it has its business across the world. So there is no need of introduction for that. But if you look at the stock price and the stock chart is available since 1980. So from 1980 the stock has given a return of 8,100% since 1980 till 2017, and it's been kind of flat from past 5 years, and then it again falls down into 2020 with the starting of health crisis across the world. But if you look at the chart is at its support level, or you can say one of the interesting levels. If you look at this area, so this is the price from 1988 till 2020. So what you can see here is a flat kind of trend. Okay, though there are spikes, but the overall trend is a kind of flat one. So what you can see here is a flat trend. Okay, now if you look at this chart, here, what you can see is something like this. Okay, so why I am saying from 1998 is because if you look at this chart, it's a flat one since 1998. It means that our resistance or support or our target, either on the upside or on the downside, will be restricted inside the range. Okay, so that's the nature of the flat chart, and that's what we are going to do. So there are lots of supports and lots of resistance which are available in this particular stock. So supports and resistance are available in this particular stock, and what you can do is you can use this support and resistance for short term, intermediate term and long term trend. Okay, so this is what you can do. So this is your trend. Now let me just explain the important support and resistance level. Okay, so what we are looking here are the extreme ends. So the extreme ends of this chart is 65 or probably 66 on the higher side and $8 on the lower side. But the way the stock is moving, what we can assume here is that stock is probably going to go higher end of the range rather than on the lower end of the range. But because it is in the middle of the trend, we should not think in one way. So we have to consider both support and the resistance level. So these are your current support levels at 23 and 22.51. Below which the next support will come at around 19.45, then 16.36, then we have 14.01, and then 8. Below 14.01 the final target will be 8 on the downside. And for the upside, if you look at the upside, your first target will be at 34, your second target will be at 44, then you have your target at 59 or 59.18, then 66.88. So I refer this one as resistances, you can call it as your targets, both are similar. So this is what you can see in this trend, and you can, as I have already told you, you can use these targets for your short, medium as well as for your long term supports and resistance. but mind this very carefully that you are in the middle of the range. The stock price is in the middle of the range, so the movement can go either on the upside or on the downside. Because there is an assumption that stock price could move higher does not mean that the probability vanished for the downside. The same probability is also there. So you have to manage your risk via using stop losses. Okay, but you have your upside, the probability of upside is higher. And why I am saying that we should not go beyond 66 is because this is a consolidating range. Once the stock price moves above 66, 67 and stay above there, stay at that level, so the price will give us an indication that there is a clear breakout, and then we will confirm ourselves that there is a breakout. And after a big breakout of 18-20 years, you can assume a big trend, a very big trend, which is about to convene, but it will take some time. So probably the time we don't know, but the price which we have to look at is beyond 66 or 67. So this is what you can look at this trend, a flat one. If you are invested since 1998 or 2008, probably at the highs, from the lows, you have made a pretty good money. So from the lows of 2009, the stock has given 740 odd percent of return. And if you are an investor since 1980, so anyhow you have made lots of money over a period of 30 years. So there is no denial in that. And one more thing, that this interest rate, because this is a financial services company, it has banks and other financial businesses across the world. So you understand one thing, that falling of interest rate is indeed not good for banks, but things go in for interest rate. If you are considering interest rate, banks have the maximum option available when it comes to make money. Okay, so it's not possible for an individual, for an institution to make money via different instrument. But when it comes to banks have, if you have one way, 10 ways, 15 ways, probably 20 ways, banks have 50 ways to make money. So understand this, interest rate going down, if it is good for you, so does good for bank. It may not earn money from interest rate, but it has lots of new ways to make money. So if you are an investor, just think the ways with which bank can make money. Don't stay with the conventional thought that if the interest rate goes down, bank will be vanished. Bank can't be, because they are the lifeline of an economy. They are the blood of economy. Okay, so without banking, without financial institution, an economy cannot sustain and cannot survive. So just understand this. And banks have the longest life cycle if you come across entire companies and sector. So this is the end of the video. If you like this content, share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.